Mortgage rates, we're continuing to track this. Mortgage rates falling to the lowest level since mid-March. The 30-year fixed rate falling to 6.77%. But what other costs should home buyers be aware of? Here to discuss some of the hidden fees that you need to watch for if you're in the market, we've got Sean Grzebin, who is the Chase Home Lending Head of Consumer Originations, joining us. Sean, first and foremost, a lot of people, as we were talking about in our last discussion, they'll think about some of those upfront costs. And one of the main upfront costs that people think a lot about is just the down payment. But what are some of the other, perhaps top three, maybe even top four expenses and fees that people should be readying their mindset for?
Well, thanks for having me first, Brad. And I totally agree with Ross on some of his insight around renting versus buying. But as it relates to the cost of homeownership, obviously you have the down payment, you have your interest rate, which I think most customers really tend to focus on in the process. And the area they spend less time on, frankly, are the fees that go along with not only the interest rate, but also the cost of buying the home. So those closing costs are disclosed actually on a government document that makes it actually pretty easy to compare as long as you shop with more than one mortgage lender.
And so with that in mind, we've continued to watch, and let's put the mortgage rate 30-year back up on the screen here, because that's kind of the week over week that people are continuing to see moderate lower here. And especially as we're looking at it below right now, that 4-week average and even the 52-week average. What do you think that this will initiate in this near term as people are trying to time their entry into the home buying market and where they're throwing bids in?
Yeah, so right now about 70% of the mortgage debt outstanding is less than 4%. So even though rates have come down slightly, they're still relatively high considering what most customers have dealt with the last few years. I think what we are starting to see is some of the lock-in effect, which is really customers not willing to list their home because they have such a low rate. Now that rates have been high for some period of time, we're starting to see a little easing. I think customers are becoming more comfortable listing, and we're actually seeing inventories grow for the first time in several years.
And so with inventories growing, does that mean that we'll see some of the bidding spread out, or is this going to be more concentrated as it's continued to be? Because for kind of coming into these past few weeks, we had seen some of the homes that are still getting multiple bids, the period that they would be on the market was lengthening just a little bit as well.
Yeah, and honestly, we're seeing a lot of that. We're seeing price reductions for the first time in a while. We're seeing less of those price wars on individual homes, but it is different based on where you live and the competitiveness of the individual environment there. But I think generally speaking, we're seeing prices, they're still growing, but starting to grow at a slower rate, which again, I think is advantageous for future home buyers for sure.
One huge word in the home buying market, especially when you're going to get approved, worthiness. So how can people and potential homeowners, prospective homeowners, improve their worthiness for that loan in order to get them into the bidding wars and really outlast the bidding wars for that dream house?
Well, at Chase, we really think the best thing to do is go to your bank and see your home lending advisor, because from there, you can get a lot of expert advice for free. They'll help guide you along the process, and they'll also educate you on the things you need to know, because mainly it's all about employment and reserves, as Ross mentioned, as well as your ability to maintain the mortgage payment through time. And so all of that can be figured out by simply sitting down with a home lending advisor or really any mortgage company and talking through exactly what you need to qualify and where you stand today.
And just one other thing within this sub question, because I saw being an advocate for your own financial health and literacy. How do I show up as an advocate for self when I'm going into these conversations, whether that be with a financial institution and trying to get a loan, or whether I'm going into those negotiations? So many different parts and some complex conversations that people, if they don't have representation, that they might have to navigate themselves. So how can they advocate for themselves?
The main thing to do really as it relates to your mortgage is to actually shop. We find, studies have shown 54% of customers don't shop. The 46% that do actually get a better deal. And so it's never good to just go to one lender, first off. Second off is, again, find someone that you trust, find people that have bought before. Again, at Chase, we have home lending advisors in branches across the United States, happy to help anybody at any point in time. But really, there are advocates available. Your realtor can be very helpful as well in the process. But I really encourage customers mostly to represent themselves in this and take the time to shop. It's become easier. As I mentioned earlier, there's a standardized document that allows you to compare costs, rates, everything you need, including payments. And it's just most important to not be in a hurry, to not be intimidated by the process, which many customers are, and to actually explore your choices.
Sean Grzebin, who is the Chase Home Lending Head of Consumer Originations. Sean, thanks so much for taking the time here with us today.
Thank you too, Brad. Appreciate it.